All right, we are back for another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing very well, man. Thank you for doing this. This is always a treat for me. It's the way I wrap up my week after this. I got a couple of days off, but this is always a great way to end the week.
I love it. It's a nice summary. It really recaps what's important for the week and where are we. Obviously, it's summertime, graduations, people are getting out of school. This is for June the 7th, 2024. Let's get right into it. Rate cuts, a lot of talk. What did you see this week and what are your thoughts?
Well, folks, rate cuts have started. They just simply have started. It started with Canada. Canada cut 25 basis points from 5% to 4.75. That was followed up the very next day by the European Central Bank, who I think went from 4 to 3.75. So we now have two, basically the G7 areas cutting. There's obviously lots of questions about the US and the Fed. We obviously have a Fed meeting next week. No cuts are coming next week. Don't get it twisted. But the expectations are once again up. We got as low as one rate cut. Now there are expected to be two. And if we talk about Canada and the ECB, both of their markets are pricing in one additional cut in 2024. And the other thing I find really interesting about Canada and the ECB is they're cutting before inflation is whooped. In Canada specifically, shelter inflation is still over 6%. In Europe, they actually are expecting inflation to be worse than they were expecting 3 months ago. So this tells you something. Central banks will cut without question before they get to target. And it has started. Rate cuts have started. They all were raising together, and it's probably not out of the question to think that they're all going to start cutting in their near future. What that means, what happens next, we don't know. But at the end of the day, rate cuts have started.
It's very interesting. So when you talk about rate cuts, ECB, explain to I believe that's a European Central Bank. Is that what that is?
Perfect. Yep.
Okay. All right. And so when you said Canada is pricing in a one additional, that means for a total of three expected?
No, it'll be two. So Canada's already done one, and the market is saying we're not done yet. We're going to get one more.
Okay. All right. Very, very interesting. See Canada, European Central Bank. So talk about market expectations. So what does that mean to the market? And I believe when we say market expectations, we're talking about the stock market, private
Well,
equity.
it's the smart money. There's actually a tool called the CME tracker, basically where it's pricing in rate cuts. And yeah, they're basically pricing in two rate cuts. They're pricing in the first rate cut in September with one to follow in either November or December. We should probably ignore, I actually didn't give you this in the show notes, but I'll throw it in here. Citigroup came out and was actually pretty negative. Citigroup said that they will cut 50 basis points in July and have a total of 200 basis point cuts in the next 8 meetings. So the Citigroup, very bearish. They see that they clearly see the job market deteriorating, and that the Fed's going to be late. So Citigroup's the first big bank to be that bearish. In fairness, they've always been the bearish of the big ones, but I think they've gone next level in their bearishness call.
So when you say over, okay, so 200 basis points, that's 2 points, 2%.
Correct.
Over eight sessions. So is that about a 12-month calendar, or how long
No,
would that be?
it's probably into early Q2.
Q2. Okay, 2025. All right. Wow. Anything else on market expectations while we're here?
No, the only other thing about market expectations is the number that comes out tomorrow is gigantic. So we'll just jump ahead. We'll get there now. We every week we get three, or every month, excuse me, we get three jobs numbers. We'll talk about the other two in a minute because we already have the actuals. We're recording this on Thursday because schedules didn't work for Friday. But we get the BLS, Bureau of Labor Statistics report for the jobs number. I believe the expectation is 175,000 additional jobs in May, with an unemployment rate staying stable at 3.9%. Well, when you look at any number, it could be better or worse than expected. So let's play both scenarios out. Let's say it's worse than expected. What is worse than expected? In this case, it would mean something like 125,000 jobs. So it would be a miss to the downside. Another miss could mean unemployment goes from 3.9 to 4%. If you are in the camp that you want rate cuts soon, that's what you need. You need a miss to the downside and you need unemployment going up.
Yeah.
That is the thing that's going to catch the attention of the Fed. Let's play the other side. Let's say instead of 175, we get 225 and the unemployment rate stays the same at 3.9 or heck goes to 3.8. If that happens, you could take any September rate cut just off the table immediately because they're not going to have enough data. So, dude, tomorrow's a big deal. If you are in the, hey, we need rate cuts or we don't need rate cuts, it's a big number.
Very, very interesting. I want to ask you a historical question, and I know this is off the show notes. So if we look at, say, in the 90s, the recession in the 90s, what was unemployment then, or even what was unemployment in 2000, like say 2008? Like what kind of unemployment numbers did we have?
In 2008, I do believe we peaked at over 10%. In the Great Recession, we got to double digits, I believe. Okay. I want to say 11%, but I could be off. In the 1990s, I don't recall. I mean, I have the 54-year spreadsheet, but I can't bring it up right now. But I'm going to guess 8-9%, just a guess.
Okay. So even if for us to go to 4, it isn't a disaster, but it means that the trend, it's the trend. The trend is shifted. It's the trend.
Yeah. And there's something called the Sahm rule. I'll try to give it to you simply. The Sahm rule basically says, if unemployment ever gets a 0.5% above the trailing 6-month average, we're in a recession. So the Sahm rule, giving rough math today, pegs the pain point at 4.2.
That's the recession. 4.2 means that we are headed
as of today. Yep. Correct.
Very
given that rule. Yeah.
Anything else on, say, with JOLTS report, and then even talking about ADP, anything?
Yeah, let's just get into those because I think it's important. Every month we get 3. It usually starts with the JOLTS reports. JOLTS reports are job openings. For 30 years of my, economic career, we really never looked at the JOLTS report. It only became important, at least in my area, during the pandemic when we had, 10, 11 million job openings and we just had a mismatch of supply and demand. That is now trailed off to 8.1 million. So we have seen that come down a lot. And again, this is what the Fed wants. The Fed wants a more balanced job market. The Fed arguably needs some layoffs to come to pull back on demand. So the JOLTS report, the Fed was smiling. Let's go to the ADP report. That was next. That's private payrolls. I don't remember the numbers that I do remember they missed to the downside. Again, they were expecting like 190 and it came in at 170 or something like that. So a pretty significant miss. Again, the Fed is smiling, but all of those, they won't matter tomorrow. The BLS report is the one that will be market moving.
So the Friday number tomorrow, we're recording this. Obviously, this will be posted on Friday. So folks, obviously that number, the Bureau of Labor and Statistics, that number is going to be obviously very, very important for what happens next with rate cuts. Are we going to see cuts with the Fed, or are we going to just be in a terminal rate in a higher for longer holding pattern, right?
Well said. Very well said.
Very interesting. Very interesting. I love it. Thank you for all the work you do here. Let's keep the show moving. So let's talk about active inventory. What did you see with active inventory and your thoughts on it?
7% rates matter. We've seen 7%, 7.5%. We're seeing active inventory build. I was following Lance Lambert. I think he highlighted that May inventory closed at over 700,000 active listings. Compare that with 2021, which is like 450,000. So way above where we were at the bottom. Not quite where we were in 2019, which I think was 1.2 million. But inventory is building. I think inventory has built every week of 2024. And, oh, by the way, you know this, but we're out of the spring selling season. So it could get slow. And what is slow going to mean? Less transactions. It's going to mean more days on market. It's going to mean anybody who's motivated, probably going to have a price reduction. I think the second half is going to be much slower than the first half.
Very interesting. I wholeheartedly agree. We talked about this on Monday. I have slow inventory, weird inventory, with HOA problems or even price reductions. We're putting them into contract. We're negotiating closing costs for buyers, which was not normal if you go back into last year. Definitely a shift in the market for inventory. Any other thoughts about inventory? What do you kind of see? So you think this is a trend that continues through the summer into the fall?
Yeah, no doubt. I mean, the only thing that could reverse this is a significant move lower in interest rates. I still believe the marginal buyer comes back. I think we talked about this last week. The magic number for me is 6.7. Why 6.7? Again, I want to give credit where credit is due. Nick from the Wall Street Journal pointed out that the last 52 weeks rates have been above 6.7. So I think consumers, look up if we ever got to below 6.7, and that could happen. We get an ugly jobs number tomorrow. Rate cut expectations go from 2 to 4. Canada, ECB, the US start cutting. I mean, it could happen. I'm not saying it will. I'm just saying it could. But yeah, if we had a big move down in rates, that could reverse the trend. But right now, dude, I've been clear. Right now, I hope rates stay at 7. I hope the housing market heals. Inventory. I'd love inventory to be at 900,000 or 1,000,000 by the end of the year. We could get back to quasi normal in 2025.
100% agree. Higher for longer, obviously, is a good thing to let this market normalize, stabilize, and 100%. So let's talk about anything on days on market. I know that was a part of the notes. What did you see there?
Guys, I keep imploring you. If you're a part of One Rental at a Time, you follow what we do here. There's only one metric I would be looking at today to key in on writing disrespectful offers, and that's days on market. If you follow what I talk about, you have a buy box. If you follow what I talk about, you have daily discipline. You should know what the average time is for a listing in your buy box to go pending. You should have that data. You at a minimum should have a gut. I was talking with Matt, the mortgage guy, the other day, and in his market, it's about 9 days. Below the median, priced right, 9 days. If you find a listing that's at 38 days or 27 or heaven forbid 61, and you like it and it fits your buy box, I would write a disrespectful offer that made sense for you. Now, again, remember, you're probably going to get a no answer. But as the market slows down, more and more people will counter. Your odds of finding a motivated seller go up. Folks, in a slowing down market that's pivoting from a seller's market to balanced, and heaven forbid, balanced to buyers, the patient, the follow-up, the consistency. It's our time to do the work.
So spot on. So spot on. And I also want to just share that, 3 decades of being a real estate broker, traditionally, we've been trained as a good, strong listing agent. You're going to get a price reduction at 21 days if that thing's not moved. And then most people, I think after 30 days, I think a seller scratching their head going to the listing agent for somebody who doesn't have the experience going, well, what do we do?
What the heck?
And kind of a panic, especially because they think it's still maybe a stronger market than what it really is. So very interesting, Michael. Let's transition and let's pivot here. I want to ask you a question. We're going to talk about opportunity because that's what this channel's all about. This is what the community's about at One Rental. But before we do that, I want to ask you the same question from last week. Interest rates, even based on the news, based on unemployment, tomorrow will be a big deal. If the over-under, if the employment tomorrow is slightly negative, where do you see interest rates trending for the next 30, 60, 90 days?
Yeah, if the job, let's just be really clear. If the jobs number tomorrow is 150,000 or lower, mortgage rates are going sub 7 because that will solidify a September rate cut.
Got it.
And could potentially be a September and a November rate cut if it's ugly enough. It's that important. If the number comes in at 70 and above, it probably takes September rate cuts off the table and we stay above 7. It's everything for rates.
So let's just say it comes in at par. It comes in as expected. It comes in the higher number. Rates stay, you think, for
7.
the seven,
7.
7.25,
Yep. Right in there.
maybe even some weirdness in the market, maybe even as high as 7.5.
I think we trade between 7 and 7.5, maybe 7 and 7.4, probably somewhere in there.
Okay. So tomorrow's a big day.
Oh, big day. I mean, we get an ugly number, like 125. I mean, seriously, no joke. Rates could go sub 6.9 in a pretty quick fashion if it's an ugly
Interesting.
number. Because again, they'll just pull forward those rate cuts. They'll be like, hey, look at Canada. Look at the ECB. We're in a recession. Stop pissing and moaning. Dude, the Fed could be pushed. If the number tomorrow is ugly enough, the market will go from expecting a quarter point cut to expecting a half.
Interesting. Wow. Yeah. Wow. 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 So let's bring it home. Opportunity for the one rental at a time investor, realtor, loan officer. Also, too, I know some people know this, but tell them what you're doing with school. Talk about opportunity and then tell them what you're doing in school. I think it's phenomenal. Tell them about it.
Yeah, the opportunity is there for us. This is our time. It's never been better to do the work. Everybody's scared. Inventory is building. Motivated sellers are easier and easier and easier to find. Doing creative deals, 90% CLTV, first and seconds. It's our time, people. There are people that have to sell, and it's our job to find them and put together win-win transactions. Stop believing the doom. Stop believing all this stuff. It's your time to get wealthy. Do the work. It's not easy. It's never easy, but it is always possible. Now let's talk about school. So I started a school community a couple weeks ago. I've been telling folks as soon as we get to 100, it's going to get extra special and good. We're now at 110. What does that mean? Well, we've already released thousands of dollars in bonus material. You gave a 6-hour masterclass on creative finance. I gave 11-week boot camp. Other free courses are there. But we're really merging my Rolodex of amazing people with a community of people that want to move now. Yep. School allows me to create content, allows you to get your questions answered now. And for example, just this morning, we had Jonathan Twomley, a big apartment multifamily investor, talking to our community. Saturday morning, I'll be talking at 8:30 a.m. I'll be interviewed. The community wants to interview me, ask me questions. So we're going to do that Saturday at 8:30. 9 a.m., we're going to talk to the uneducated economist in school. Monday, I asked the audience yesterday, congratulations, we're at 100. Who do you want to talk to? They said Greg Dickerson, somebody who was a featured speaker every Monday in the community for 3 years. He's been out for a year because he's just so busy doing other things. But he said, yeah, heck yeah, I'll come back and talk to your community on Monday. So just in the next 4 days, you got opportunities to ask millionaires and multimillionaires questions right now. So I'm so excited by what we're doing. We're already over 100, releasing special content just for school. And more and more goodness
Explain the
coming.
100. Explain the 100, the significance for somebody that maybe is a little, they're not clear. When you hit 100, how does that change your content?
Yeah. So what I was doing is I'm trying to, on YouTube, if people watch me, I produce 5 or 6 videos a day. I have been told for years that I produce too much content and the YouTube algorithm hates me. So what I am deciding to do is take some of my interview discussions, make them only for school, and they will only be published on school. And more importantly, I will create content with my school participants. So when I talk to Anna Kelly in school, the community will be with me. So we'll all ask the questions. And if you can't make it, you can watch the replay only on school. So I had a goal to talk about school because it takes time to build. I thought it would take a month to get to 100. It took 15 days. So we're there. So I have to hold my end. So you will see data, content, valuable stuff only on school. For example, Jonathan's very valuable conversation on school, only there. Conversation with a CPA. We had a conversation with Baum Lang with the main bean counters. You want to talk about real estate professional. You want to talk about LLCs and all these other things. It's only on school. So pretty cool stuff, man.
I love it. Folks, If you are not on the Skool community, I want to encourage you, get involved with Skool. It's SKOOL. It's a community, it's a platform, has some of the unique features similar to Facebook where people can post questions. There's a lot of interaction. The big difference is this, all of the content that's going to be exclusive that Michael talks about, as well as like kind of like the Zoom meetings and being in a coaching program that people pay hundreds, if not thousands of dollars for. He's doing it for pennies. It's $20 a month to be a member of it. Folks, if you have any interest in going a little deeper, getting to know Michael more, getting to know the community more, sign up. Skool, SKOOL. Michael, thank you for all the work you do. Have a great weekend. Thank you.
I will. Thank you, brother.